Good morning, everyone. Thanks for joining us this morning. This is Matt Tour with Insurance Agency Marketing in Omaha, Nebraska. I want to do thank you for joining us on this Friday morning. Glad to have you aboard. I know we'll be joined by Craig Geiger here shortly from Lincoln Financial Group, their regional sales director. Does a great job in the marketing of the Lincoln products. He's got some great information he'll be discussing regarding their programs they have available right now through Lincoln. He's got some great details on the new Fidelity strategy and some other information he'll be reviewing here in a short period of time. I'm going to go ahead and get things started here. If you do have any questions along the way, be sure to get those asked. We'll go ahead and get those answered as quickly as possible. We do to continue to offer a couple programs that have been very popular here in the past. Our referred producer program, you can earn additional money based on referring agents to IMES. They do production, you earn 20 basis points based on that production. We also have our marketing reimbursement. You get $100 for every $100,000 of index premium you produce, so a great way to build some nice bank accounts based on those two items. We also have our new producer perks, good way to earn some additional incentives based on different levels of production in your first 180 days. We have a $100,000 level all the way up to $1 million level. You can choose between Boss Radio, iPads, different cash incentives. We've got Ritz-Carlton Getaway Package, really some nice programs you can choose from. And as you escalate up the levels, the programs are worth more and more. And you can do preset appointments. I mean, a lot of different things you can choose and utilize based on your production. So I've seen a number of agents utilize some of the coaching with Dave Pemper. He's got a great Social Security turnkey seminar system. That could be one of your items, and a number of other programs you can choose from. We've got a great back office support team here at IMES. I know we have a great new business team, a great creative team that can help you out with creating pieces you can utilize in the field to get in front of more clients. We've got some really good stuff going on that side of the business right now. And if you do have anything you want to work with on the creative team, they'll be more than happy to get you started. Maybe if you want to redevelop a website, do a email campaign, or do a mailing campaign, they can really help you out with all those tools. And the back office support team, I know we've got Amber heads up that new business department. They do a great job in helping agents utilize the technology with the new Firelight system we have in play right now, which is for e-applications. I know we have a lot of agents utilizing that. We have a number of carriers that are already on board on utilization of that new system. We've got some other companies coming up soon. I know we see about 30% of our apps now being submitted on e-application basis. Really helps with getting the app in fully filled out. You know, the numbers match, names match, everything is in order, and we run into a much less problems with business that comes in via e-app versus being written out. So that is definitely something to keep in mind. A lot of companies do pay a little higher compensation right now if you do the e-app. I know that Bright House Financial, for instance, does pay you an additional 50 basis points by using the e-application as opposed to writing out the application. So definitely keep that in mind on your side. We've got a great creative team, as I mentioned. They do great logo designs, developing websites. They do help with business cards. If you want to put together maybe a brochure for your business, they can help you out with that. If you want to redesign your company logo, you know, doing any social media campaigns, that can really be the additional information that you need to get involved with those items, and they can help you out with that that whole process of getting that all set up and getting it in the field and utilizing those different items that you can take advantage of based on today's technology. We got a great website you can utilize here at IMES. It's available 24/7. Really a nice program we have available through our group that's done our website for years. You know, you can do quotes on it. You can do life insurance quotes. You can do long-term care quoting. You can do income rider comparisons on our website. I mean, a lot of very good, valuable information. You can compare different index strategies, what the returns have been in the last number of years. It's really a great go-to. Of course, we do keep our current annuity rates available there right online, and you can download the current rate books. I mean, everything is available there right on site. We also have our IAMS Wealth Management division. I know we started this about 2 years ago. We've really seen that take off in the last about year. We've seen a really big increase in assets under management. If that's something you would like to get involved in, I just launched a quick poll. Mark off yes, you would like to have our wealth management team give you a call, kind of go over the process of maybe doing your 65, doing other things to get your maybe your securities license switched over to the IAMS Wealth Management side. We only deal in the Series 65 side of it. We don't deal in the Series 6 or 7. If you have those licenses, you'd actually have to get those hooked up with a broker dealer and be able to do it that way. But if you do have interest in being contacted by one of our wealth management crew, I'd be glad to have Charles Jr., Michael, Joan, all those individuals will be available to get in contact with you to go over some of those platforms that are available. I know we brought on some new money managers. We have a lot of different options available. If you wanted to take a look at some of the different programs that are available on that side of the business, we do have a really good selection of low-cost platforms. So definitely take a look at that. I'll leave this open for about another 30 seconds. I know that the stock market's been doing really well the last number of years. We've seen a big period of growth, and it's just a side of the market you definitely want to have available when you're in the field. You hate to refer a good client to somebody else. You might eventually end up losing that client based on some of the options they might have via their relationship with the new person. I mean, it's just, you hate to refer clients to other people. It's always good to keep them in hand. I'll go ahead and close it up real quick, and we'll go ahead and get to the next slide. We also do our Life and Annuity Academy, as this is a big event we do about 3 to 4 times a year. We do have one coming up in May the 6th through the 8th. It's a Wednesday through Friday. We're going to be holding it in Des Moines, Iowa. If that's something you have interest in going to, it is an all expense paid trip. We take care of your flights, your room and board. Everything is taken care of. It's really a good 2.5-day meeting we put on. We do have a good group of people that typically do go. We've got some great speakers we bring in that'll be going over details regarding sales ideas and other viable information. If you have interest in that, I'm going to launch a quick poll here on that side of it. If you'd like to get your name as an interested party on the Life and Annuity Academy, go ahead and mark yes on this poll I just sent out there. And I know that we typically bring in between 35 to 40 agents to these meetings, and typically we bring in a good group of established agents. We also bring in some newbies, so it's a good way to do some reviewing with other agents that are very successful in the field. Do some networking to get some information on what they utilize in the field that really works for them, and being able to take some of those details back with you to your location is really valuable. I know we always see a nice bump in production from the agents that do attend in the months following these meetings. And we go over a lot of good details on kind of the industry overall, what direction it's heading in, what are the hot indexed options out there right now, what's available in the life insurance side, what companies are we seeing the most success with right now, what types of products are really selling in the field. We'll go over all those details with you at these meetings, and of course some really good software information if you're interested in taking a look at some industry software we utilize, be it our retirement analyzer software program that you use with clients in the field. It's really a good picture of where they stand for retirement right now and kind of what direction they need to head in and to be more successful with their savings. I'll leave this open for another 20 seconds or so on that academy if you do have interest in coming out to one of our meetings. We typically hold these about three to four times a year. First one's in May. We might do another one in July. We'll probably do another one, say, in October. We'll probably do a total of 3 this year. But it's really a good way to get to meet some of the IM staff, be able to really get some good sales ideas out there. A good turnkey program we have there. But as I mentioned, the first one is coming up in May, so we do have some time to look at that. Do have a great trip we're going to be doing in March of 2021. It's our IMS Paradise in the Pacific. It's a great trip we'll be holding in March. It's based on 18 months of qualification. You do have through December of 2020 to qualify. Qualification did start the 1st of July. It does take 3.5 million credits to qualify. So all of your production on annuities, life insurance, long-term care, Medicare supplements, everything has a value of points to it, and all of those add up to really get you a nice total based on the business you write through IM. So a great program we have going there. If you do have interest in getting some additional information where you stand now on the trip, what your qualification points need to be through the end of this year, based on what's available through our product line, definitely give us a call. We'd be glad to help you out. And then we do have a more higher end trip. It takes 6.5 million points to minimum qualification based on that. If you do 8.5 million points, you automatically qualify as instant qualification. That's going to be to the Punta Mita Resort in Mexico. It's a 4 seasons resort there in Punta Mita, Mexico. So should be a fantastic location there right on the ocean. Looks like a really exclusive spot there in Mexico. So it'll be definitely a worthwhile trip for you to make, and good time heads by all by qualifying for that trip. And we've got some great information we'll be discussing at these trips, and we will also bring in some good, really high-end speakers, some of these, and great times had by all. But at this time, we're going to be moving over to Craig. I know Craig is a specialist with Lincoln Financial Group. He's been with the company for a number of years. He's our regional sales director. He's got some great details he'll be discussing on their Opti Blend series with this new Fidelity strategy. We've seen a really good mix of business coming in between using the Fidelity strategy and the S&P index. And I know that they have a great grouping of strategies you can choose from based on their Opti Blend series. And they do a great job with getting the business issued. They got a great new business team there at Lincoln. So we're glad to have Craig on this morning. So good morning, Craig.
Good morning.
Morning, sir. I hear you loud and clear, and I've got your screen up on my screen, so you're good to go.
Perfect. I was just about to ask you if everybody could see my screen. So
yep.
Thanks, Matt, and thanks everyone for being on today's call. We have some really exciting things going on at Lincoln, and really one of the things I really want to focus on is our new Fidelity strategy. It's a strategy that we actually released about September of last year, and it has been a hit since the minute we launched it. And just to give you an idea, it did a 4% return from September to December 31st. If you look at the whole year, it did about a 12% return. So the strategy itself is very well positioned, and not just because of the fact that it's different, but it's really in terms of the way it was built. So if you think about most index strategies today, they're all built to obviously give you a piece of the upside when the market appreciates. And kind of like what Matt had talked about earlier, we've had a great bull run here, and obviously the market's been really, really good. And so of course, with index strategies, you can always get a piece of that upside and lock in your gain. But where I think Lincoln was trying to think outside the box here was trying to think about not so much where the market's been the last 10 years, but where it's going. And what do I mean by where it's going? So if we ask 2 questions, do we think we're eventually going to come out of this bull market and it's going to correct? I think everyone would agree eventually that's going to happen because it always does. So that's one variable that's on the table. 2, do we think we're going to be in a compressed low rate environment for a while? I think a lot of people would agree we probably will be. So if you take those 2 variables and you put them on the table, historically, what has performed the best in those type of environments? And that's blue chip dividend paying stocks perform the best in those environments. So to kind of put this into context, let's kind of think of a couple time periods that are very similar to potentially where we're going. If we look at the 1930s, dividends were positive in that decade, equities were negative. If we go to the next decade, being the 1940s, dividends made up between 60 to 70% of the total return of the market. And then if we go back 30 years and we took out the dividends, the returns would be 50% less. So in the right environment, dividend paying stock type of index is going to be really a good vital fit for at least part of the overall strategy that you want to look at. And obviously, it's something that's very, very unique to Lincoln because it's with Fidelity. So it's a proprietary index that we have with Fidelity. It's actually based on the Fidelity ETF that's already been in existence. So this is actually based on something that's already been around. And obviously, the key differences here is obviously we got some volatility buffers with bonds and of course cash to kind of offset that volatility. So we'll talk a little bit about that. We'll talk about custom accumulation, and then we'll kind of dive real quickly into the income story and kind of where Lincoln fits, and then we'll just take it from there. So obviously, like I said, we know the markets is where it is right now. And obviously, we know eventually if we look at anything in the past, that's all we can reflect back to is looking at the past. We know eventually we're probably going to correct. It's just a matter of when, not a matter of if. So when we look at the one-year Fidelity AIM dividend participation account, really what it is it's actually made up of about 125 blue chip dividend paying stocks. Now, what makes this unique, though, is it's very disciplined to pick what those 125 dividend paying stocks are going to be. We actually have a listing of what those stocks are and the percentage weight that they actually make up in the total index, which gives you transparency. So I gotta say with an index, you really want three things. You want a simple design that's easy to explain to your clients. Two, you want it competitively priced. And then three, you want transparency. You want to know what's in that index. And this particular index is very well positioned to give you all three of those things in the sense that it is a simple design to explain to the client. It is competitively priced. And of course, it has that transparency part of it. So the way the strategy is going to work is it's a one-year strategy with a par. So it's real simple. So every year, if you get a gain, you're going to get a percentage of that. You lock that in and you start fresh the next year. Everything at Lincoln is one-year strategies. We do not believe in 2-3-year strategies. Just to give you an example, if I have a one-year strategy and a 3-year strategy, and I get an 18% average return over that 3-year period, and if you're to ask, I was to ask you this question, what would the average return be over on a 3-year strategy? If I got an 18% average return, it'd be 18%, right? Because you're going to get that credited at the end of that 3 years. If I got 18% credited over a 3-year period with a 1-year strategy, it'd be closer to 19.1 because you're getting the benefit of compounding. So 1-year strategies really can play a vital role in potentially trying to get you more upside potential for your clients. So when we look at this particular index, the nice thing is we've gotten the new numbers, and this thing averaged a little over 7% now with the 2019 numbers. So the index has performed very, very well. This index has its own ticker symbol that we can send you. Like I said, it has a lot of different features in it that make it very, very unique in the marketplace today. At the same time, I just want to point out here that in the in the green is where we just talked about that 1-year Fidelity AIM dividend participation account, which again is a very unique index to Lincoln. But we also have a ton of other options that you're probably looking for. One being an uncapped strategy with a spread, and you're looking for obviously a 1-year cap and a 1-year par on the S&P. So we have all of those strategies. The blue one, though, in particular that I want to point out is the fact that Lincoln really has 2 unique indexes, not just one, but 2 unique indexes. Obviously, one is the Fidelity strategy, and the other one is going to be that 1-year S&P 500 5% daily risk control. I know that's a mouthful, but really what that is it's a volatility control index. And I know everyone's seen volatility control indexes. There's companies that have pioneered that, 5-6 years ago. But what we found is some of those strategies have not performed as well as anticipated because the biggest thing is if you go back 30 years on the illustration, it illustrates really well because bonds were a part of that overall portfolio or index. And of course, going forward, being in a low rate environment, because obviously when you go back in time 30 years, interest rates were higher and of course they've gone lower. So it's going to illustrate well, but going forward in today's environment, obviously interest rates are low. So if anything, it could be a real hindrance and a governor on the performance. So we decided to do is because we came a little bit later to the party in terms of the volatility control indexes or the uncapped strategies, we said, what's the biggest governor or biggest holdback on the performance opportunities for the client? And that is, in fact, the bond. So we took out the bond component and we created a cash account instead. So really what that does is it allows us to react quicker, to be more on the equity side and get more upside potentially for the client. And then the other thing that makes it very, very unique is that dividends are included in the performance, which again is so key to so many strategies today don't include the dividends. And like I mentioned earlier, if you go back 30 years, the return will be almost half because the dividends were not included in the performance. So now you got two unique strategies at Lincoln that no one else has that are very unique to us. And then of course, we got the ones you always want is a 1-year cap and of course the 1-year participation. Go to the next slide.
What percentage of your new business is going into the Fidelity strategy there, Craig?
It's probably, since this thing launched in September, it's probably 40 to 45%.
Good. So people are really taking advantage of that.
Yeah, every month the percentage is going up. So I think why people like it, one, obviously, is a Fidelity name. People are comfortable with the Fidelity name. If you have clients that have a 401k, 1 out of 4 401ks out there are Fidelity. So it's a real easy transition to say, listen, hey, you've been accumulating your retirement assets in this 401k. All we're going to do is transfer it back over to Lincoln and now Fidelity, and let's safeguard those assets. So it's a real easy transition to go from that Fidelity 401k over to Lincoln with an index that's with Fidelity. So I think it's kind of a name brand. People are comfortable with it. They know what it is. So sure. In terms of income when you need it, OptiBlend 10 is our #1 selling contract. So it's a non-bonus contract. But obviously the trade-off is you get way better caps, you get a lower spread, you get higher pars and so on. And where I think there's some unique positioning here is, think about people that change their mind, or think about clients that say, something, I don't know if I need an income rider or not. Most of the time you're going to choose that income rider at contract issue. Whereas we have a really kind of a different position on this. We have the ability where the client can start out with an accumulation product like OptiBlend 10, and if they want to add the income rider later, they have the ability to add the rider later, which is a very unique position that we have. Because if we look at it, if you went to Matt and said, my client thinks you're going to need income in about 5 years. So then Matt and his team are going to go look it up and find out who the top 3 carriers are that have the best income in 5 years. The problem is, yeah, they're going to have the best income, but there's a cost to that. The cost is it's going to come out of the options budget, which means you're suddenly going to buy a less competitive accumulation product, which means your growth opportunities are pretty limited. For a rider that they might never even utilize or use later at a different point, and then suddenly that rider is not as competitive because they took it at a later point in, let's say, 5 years. Where we're well positioned is you can use the OptiBlend 10, get good accumulation caps, lower spreads, higher pars, grow it for a couple of years, and then if they want to add Edge 2.0 later, they can add it post-issue and then add it at that point. What I always compare it to is car insurance. It's like, Mr. Advisor, it's like you driving to work today and you get into a car accident, you don't have car insurance, you call your insurance company, they cover you on the spot, cover the entire wreck, and you go on your merry way. That's what a post-election option really gives you. It gives you the ability to add that income insurance at a later point when the client actually needs it, and they start paying for it when they actually are going to need it. So it kind of puts you in a better position to say, hey, if I do want to add the income later, we always have that option. So you can kind of kick that decision down the road a couple of years. And then, of course, there's no fees on the contract until you actually add that rider. So it's a very, very unique value proposition that we have at Lincoln. And, of course, guaranteed income. This is kind of what the Edge 2.0 rider looks like. It's a 7% simple roll-up for 10 years. As you can see, if you look at the income-based line there, you can see that it grows by 7% every single year for up to 10 years. You can also see that the withdrawal factor goes up by 10 basis points each year. So it is very well positioned to be a really good, I think we're probably well positioned for income in years 2 to probably 6. And that's probably our sweet spot. Obviously, when you go past 5, 6 years, compounding a lot of times will probably look better, depending, of course, on the withdrawal factor you're going to get. But that's kind of where we probably play the best. And so that's a very, very unique value proposition that we have. Now, lastly, I just wanted to talk about I for Life. Now, this is a very unique rider to Lincoln. So if you think about, there's tons of highly appreciated old non-qualified annuities out there. And let's say you're doing discovery with a client for the first time and they have an old Jack's National Perspective 2 VA. Let's just say that thing's been in deferral for 12, 15 years. They grew it. It was hard to subsidize their income. And of course, it's now pretty gain heavy. Let's say it's $500,000. Let's say $250,000 of its cost basis and $250,000 of its gain. So obviously you have a very gain heavy non-qualified annuity. If the client was to leave it where it is and take withdrawals, that's fine, but the income that they take out is going to come out fully taxable or LIFO. And of course, it's not going to be guaranteed for life. So then maybe you 1035 it over to another insurance company, add that income rider, and now you're adding that lifetime income insurance and having that guaranteed income for life. But the problem is it's still going to come out last in, first out, or fully taxable. Where this is where for life's a little bit different is if you look at a SPIA or you look at what's an immediate annuity and you think about non-qualified money. The benefit obviously is I get income for life or I get income for a set period of time. But the other thing is I get income that's partially taxable because it comes with an exclusion ratio, which a deferred annuity usually would not. So instead of the income being fully taxable, it's partially taxable. So not only am I getting guaranteed lifetime income, I'm getting tax advantages with the non-qualified money. But the key part is here, if you think about an immediate annuity or a SPIA, most of the time people I think don't choose the SPIA or some people call it the immediate annuity, is because they lose control and access to the contract and they see no account value growth, nothing. Whereas with this, you'd still be using the Lincoln OptiBlend Index Annuity, but you would be adding this rider that has 2 private letter liens with the IRS and a patent that allows us to pull out the income with an exclusion ratio while still being on an index annuity. So it gives you that access and control back, also gives you the ability to do single or joint payout. And to me, it just all comes down to the numbers. If everything was equal and the income was the same, on the left side there is I for Life in the green, $13,978, and let's say the income rider with XYZ insurance company, it's also going to pay you $13,978. Where the difference is, it's all in the way it's taxed in terms of how much more net check the client's going to get. In the example on the right side, obviously all $13,978 is fully taxable income. So you see all that check is fully taxable, 28% tax bracket. Clients paying a little over $3,900 in taxes. Their net check is a little over 10 grand. Whereas with I for Life, because it has an exclusion ratio, because remember, you had gain and basis in that contract that you brought over, only $4,410 of that is taxable in this example, and $9,568 is return of cost basis, which is not taxable. 28% tax bracket, the client only paying $1,235 in taxes. They're getting a net check of $12,743, or almost $2,700 more net income off the same paycheck. And so this is kind of where I for Life really shines. And it's definitely something that's very unique to Lincoln. No one else has it because, again, we have a patent on it and we have 2 private letter liens with the IRS. So, by the way, go all the way back to 2001 because we've had it on the variable annuity side for all this time. It just became available on the index annuity side over the last couple of years. So with that, I'm going to throw it back to Matt and see if there's any questions.
Yep, that sounds good, Craig. And I just launched a quick poll. If you would like to get some additional information on the Lincoln Financial product line, I'm glad to get the OptiBlend information over to you, get you the current interest rates, get you out material, the brochure, get you out licensing to help get you started. All that will be available, at your request. So I'll be glad to get that information over. I'll also be calling everyone that was on today's webinar, going over any questions you may have. If you have any questions you have right at this point, and you want to type those in, I'd be glad to get those answered for you. And I know we've seen a pretty good block of Lincoln Financial business coming in the last couple months, mainly due to that new Fidelity strategy. And that's available on a 7-year contract and a 10-year contract there, Craig?
That's correct.
Right.
So in terms of adding the rider, you can add it to the OptiBlend 7 and the 10. Now, we do have a shorter term contract if somebody really wants to go more short term. We do have a 5-year contract, but that's accumulation only. There's no income rider available on that contract.
Right. But the Fidelity
one thing I also wanted to
point
point out,
right?
I'm sorry?
The Fidelity strategy is also available in the 5-year contract.
That's correct. That's correct. And I'm kind of glad you brought that up. So real quick, the one thing I didn't mention is whether you do accumulation business with OptiBlend, whether it's the 5, 7, the 10, or the 10 with the bonus, or you do with an income rider, the caps and the pricing on the index options are exactly the same. So there's no trade-off whether you do accumulation only or you add the income rider. And then lastly, I want to point out is that we do have a top producer program. Now these numbers might get adjusted a little bit for this year. I think that the first one's going to go up to 4 million. But where Lincoln's very, very unique is we have a very high-end trip every year. That's obviously you can bring your spouse. That's a convention. You also get access to our deferred comp program, which only S and F and G I think are left to do that, where you can allocate up to 80% of your compensation into our deferred comp program. Once you get a little bit higher, and I think the next year is going to be 8 million, that's when you start getting Lincoln stock grants or Lincoln stock, and you also get additional marketing dollars. So there's a lot of opportunity, a lot of benefits and stuff like that when you hit certain production tiers with Lincoln. And obviously we're well positioned, I think, going forward as well, whether it's for your accumulation business or your income business.
Good. And Lincoln is a very highly rated company. They're one of the highest rated companies we offer here at IMES, and they do a great job on getting business issued. And I know they've been very level on the renewal rates too. So when your client gets a policy with a good introductory rate, those rates are going to continue to be very solid for your client down the road. Anything you want to end up with here, Craig, before we let them go for the day?
No, probably the only thing is I did send a couple sample quotes, one for accumulation, so you can kind of see what it looks like, one with the eye for life with income now. So you'll kind of see that non-taxable income portion on the illustration, kind of like paying out like a SPIA. You'll see the benefits of what that looks like. And then I also included a quote with the edge rider, or maybe you took income 5 years from today. So at least you had some examples of what our new illustration software looks like, which is night and day what we had even a couple of years ago, as well as a couple different sales pieces on the product, so that I know Matt can send over to you.
Oh, definitely. I'll be sending those out as I follow up with phone calls here this afternoon. So appreciate everyone's time today. I know everyone's busy during the week and tough to take some time out to do some of these webinars, but we greatly appreciate that. We'll also be giving you a phone call later today, just discuss this information we went over this morning. Any questions, definitely give me a call, 800-255-5055. Just ask for Matt. Appreciate your time this morning, Craig, and everyone have a great weekend. And we look forward to helping out with some of your business coming up next couple of weeks. And I'll be glad to get some quotes done for you on the Lincoln Financial Group. Their software really is easy to use and looks really good for your client based on accumulation. We see a lot more business recently heading towards accumulation as opposed to the income side. And I think it's a really good combination there with what Lincoln has to get your client the best returns they can and get some really good accumulation coming up down the road. So otherwise, everyone have a great week and have a good weekend. We'll speak to you soon. Bye now.